doing well. We've got the morning bulletin for Tuesday, the 25th of the 10th, 2022. Now, the thing of note is that some news came out. I missed it. It's 12 hours ago. But the Washington Post have published an article saying that the Democrats are going to push Biden to get a resolution to seek diplomacy in the Ukraine war. So that's going to be risk on. If we have some kind of resolution in Russia, Ukraine, and Putin backs off and terms are agreed, and then there's no more war, this is going to be risk on. Okay, so there are loads of things going on in the world that is going to push price. So we have to bear in mind all these geopolitics that we need to be concerned with, and they do influence price. And these things are greater than just mere retail sentiment. These things are fundamentally driven. So a resolution in war would be risk on, regardless of the sentiment. Okay, but it is interesting that the US yields did pump despite that. So it could just be like a fake news, or just we have to wait for to see what Biden's going to say, and so that's that. So there's Zero Hedge's little tweet there. So it could move the markets. We are risk on at the big picture and at the 24-hour change. VIX is below 30, so that's fairly risk on. We'd want it below 26.5 because that's the midpoint in the year. The 52-week midpoint is 26.5. But if we go below that, it's going to be quite risk on. Now, the trouble is that the yields did pump, so it tells us that they probably didn't believe that article from Zero Hedge. However, if we do get a resolution in Russia, Ukraine, that's going to be very positive, and then these will fall. These are pumped too much, I think, and we've got an inversion on the 6 and the 2 year as well. So that's risk off. See how they're pumping at the near term, indicating flight to safety. Now, if they believed that article from Zero Hedge, these would have come down. So these wouldn't have necessarily pumped as hard. So they probably don't believe that article, or they're just waiting for some clarity and confirmation from the White House, which would be good. We need to see an end to that war. It's been going on for a long time now, and loads of people, it's causing a lot of suffering, and it's not good. So this is an inversion, so that's risk off. Sentimentally, we're risk on. Fundamentally, perhaps not because of this, and also we've still got that war that's ongoing as well. We've got US GDP, and we've got ECB rate hike, and we've got the Bank of Canada interest rate decision as well today. So we've got quite a busy calendar for central banks. So not much movement. S&P was, the largest mover of the indices. The other indices didn't really move much. There's DAX, a very small change. US 30 was a small change, but S&P was a fairly large change. Oil and UJ, they've moved quite a bit, and Kiwi USD as well. And so you want colours to match. It's quite simple. If they're not matching, don't trade them, because it's going to be a chop. So dollar is regaining strength again. Pound USD did try to, make some gains, but it got crumbled, since I woke up, and it has fallen since. So the pound USD is now the weakest on the week since last Tuesday, and dollar Swiss is the leader. So that's new. That's new. So pound weakness and Swiss weakness as well. So might be of note there. You can maybe utilize that for a trade opportunity. Look for pound weakness potentially. Look for Swiss weakness. Yeah, so that's fine, but we have to remember that our trade of the day does have CAD in it. Okay, and we've got the BOC, the Bank of Canada today with the interest rate decision. So be really careful. So if you're in profits, move your stop ahead entry, because what probably happen, you'll get stopped out and it will fluctuate. All right, so just make sure you've insured your profit before that risk event. So there's the tiers if you want to join Patreon. So you're more than welcome. There's the bulletin tier, so you get this document and this video. If you want to unlock everything on Discord, it's £15 a month, which is quite affordable. And then if you want to get the whole thing and you're an FX SSI subscriber already, then you get the spreadsheet and Discord for a fairly reasonable price there. S&P, so there's Friday's low, and so technically well supported. We are a buy on the sentiment, see we've gone green on the S&P, and so they shorted it, right? So therefore it become a buy. They went long, so we fell, and then they shorted it again. However, they're probably going to go long, and so we're going to fall. So 3,800 is the level of interest, and of course it acts like a moths to a flame. They'll get attracted to the round number, and they will see an influx of dumb money at round numbers. So we have to be a bit careful there. They're probably going to look at it and go, oh, that looks like a good buy, and I could have my stop just below, and then that's what they'll think. Okay, they like round numbers, the retail guys. So I'm going to do a quick 2-minute, 3-minute video for the private feed, and we can see what happens here. I think they would have gone long because of the round number. That would be like a normal thing. I'd imagine that would happen. So there's less choppy. US 30 is actually quite clean. Look how horrible the S&P is. Chop, chop, chop. There's a back-to-back flip-flop there. However, the US 30 is a lot cleaner. But they sold it, and they sold it, and so they're continuing. So we probably might not get a signal from this unless those lines cross. If they cross, then we'll fall. It'll be a sell. But if they sell it, they will continue higher. Okay. DAX, they've gone long, so that's a risky sell. It's a risky sell because at the high level, it's a buy because we're below 50%. So we're 43% there. So it'd be a risky sell. I mean, we've got that support. If you remember my video, we've got the inverted head and shoulders, which is now in the past, but that was a support there. So it's somewhere around there. So it's technically okay, but you want to be careful, especially if they're going long. You don't want the dumb money to be buying because the price will fall to punish them. So gold, well, they went long. Initially, they got paid, then they got punished. They went long, they got punished. They shorted it, they got punished. And they went long, they got punished, and then they've gone long again. So this should be falling. And the cut data was pretty ugly for gold as well. So you have to bear that in mind. Stop loss cluster on EU has been brought lower because it was above parity yesterday. Now the largest stop loss cluster yesterday was AU below. We took those stops as noted in Discord, and now the largest one is above. So if we go down to probe stops, we go up to probe stops, and then that's how it works. So got a few things that are matching. There's pound USD, it's matching. AJ is now flipped to sell. It was a buy yesterday, so that's going up and down. And so yes, it's basically liquidity pro both sides, which is pretty horrible. Now the euro is been a little bit naughty. It's misbehaving somewhat, but we do have the ECB interest rate hike. And remember, hike, they're not gonna not hike. They are by 75 basis points, which is quite aggressive, and that could be bullish the euro. So we're going to have a little bit of naughtiness around the euro this week because of the big fish are anticipating the risk event, and they've got lots and lots of money in anticipation, and the retail guys are going to be probably ensnared in the whirlpool of uncertainty. And then currently they're getting paid, but how long that will last, we don't really know. So for example, they've gone long. It's a positive number, and the technical is up. It's positive, so they're getting paid. So how long that will last, we don't really know for sure. Probably temporary, normally. There was no trade of the day yesterday, which is quite good because it did revolve around the pound, and we want to be really careful around the pound. And today's trade of the day revolves around the CAD, and we've got to be careful with the CAD because we've got the interest rate hike decision. Okay. Technical checks, we're going back to extremes again. UJ is strong buy, dollar Swiss is strong buy, AU strong sell, EG is strong buy. So perhaps a little bit of pound weakness. Look at the pound sentiment as well. And so we had lots of Aussie data out, which I would have stepped through because it's a 1:30 in the morning. And we've got Bank of Canada, and we've got some US data, home sales as well. And that's that. So all eyes on CAD. Be careful if you take the trade of the day, because it's going to probably be very volatile at that risk event. They say 75 basis point hike. The consensus is 4%. So I don't know if they're going to disappoint. They probably will. They will do 75 basis points, and that could be quite strong on the CAD. But we've got to be careful and keep calm or trade safely. I'll do a quick 2-minute video, and we can capture the London Open as well, which is quite a good time. So speak to you soon. Have a good day and trade safely.